is, if you look at the number of AMCs which are there in India, the mutual fund industry, AUM itself was 79,000 crores. So entire industry, all funds put together, 0.79. Today it has crossed 50 lakh crores. So in the last 20 years, it has gone up 50x, 52x.
We've had this golden period of 10-15 years where the stock market has continuously gone up. You know, I mean, I come from a time when the Nifty was at 1800. Yeah, at PropShare we started this product. We kind of, Ashim and I invented this product in 2015. It was not there before when we started. And over time we built around it, we kind of engineered it, we found the structure around it, and then we gave access to the normal guy to go and buy this particular product in a securitized form, right? And now the regulator is now saying this is a very good product and we need to introduce this as a new asset class, which is great. You know, I mean, very few times asset classes have been invented in the financial history.
Even in physical products, they buy physical gold, they buy physical real estate. Which, of course, when you have that, there are a lot of cost, no liquidity and things like that, right? So yeah, a lot of that is inefficient. You know, even at a 1 crore ticket size in an AIF, right? You get diversification. Now, if I want to take that 1 crore, what kind of negotiating power do I have with builders? Zero. What kind of negotiating power do I have with tenants? Zero. And what kind of research will I do before I invest that 1 crore? Nothing. Word of mouth, which is what pretty much people used to do in stock market. Stock melu. So I think so. You know, teaching people that this is a better thing to do with your 1 crore within the same asset class, which is real estate. If you want to stay relevant, if you want to stay in business, you have to keep innovating, keep pushing yourself to learn the new things.
Hello and welcome to this episode of the PropShare podcast series. Till now we've been talking about the real estate side of the business, the investment side of the business. Today we're going to talk about something different, which is on the demand side of real estate investing. And to discuss that with us today, we have Mr. Manish Gadhvi, who's the CEO of the B2B business at FundsIndia, which is one of the largest platforms for distributing wealth products, mutual funds, other investment products in the country. They manage more than 11,000 crores. Manish himself is a veteran of the industry. He's been, he was working with NJ Financial for more than 20 years and has recently joined FundsIndia as their CEO in the B2B business. Manish, thank you so much for joining us in the podcast.
Thanks, Kunal. Thanks for having me.
Okay, so, you know, our audience has been fed information so far about real estate investing, real estate product, and till about 3-4 years ago there was no real estate product. Only when the REIT regulations came did people finally realize that you can securitize real estate. And there was a lot of education that went around it, which is good for all of us. And people now are fairly familiar with investing in REITs, what is a REIT, what do they invest in, and so on and so forth. But today there are various alternative products available in the market, including what we do, tech-enabled commercial property listing, real estate AIFs, PMS. Tech has kind of changed a lot on the distribution side of the business. You know, when I see some of these big houses still raising capital, they look like they are still they've still not caught up to the tech side of distribution, which I think FundsIndia is kind of trying to do. So, you know, we just want to understand from you how the industry has evolved, where it is headed, and how they can understand these new products that are coming in, and how they can understand how they can leverage this technology to sell products in the futures. But to start off with, if you can tell us a little bit about FundsIndia and what does it do, what do investors do, and so on.
Yeah, so thanks, Kunal, once again. FundsIndia was a pioneer in terms of tech. One of the first companies to offer 100% digital experience to investors in the mutual fund space. And it's a pretty, it's a decently old company, right? It's not a new age startup. It has been around for the past 12, 14 years, right? What we're trying to do here is, we have two businesses. One is B2C and one is B2B2C, which I look at. So within B2C, we try to offer a digital plus tele support for investors to help them make their investment decisions. It's not just DIY, right? There are actual people who look after your portfolios, your investments, and I think so that's a very important part. In B2B2C, of course, we are building a pan-India distribution business, which is offline, more offices, more human connect with the IFAs or the distributors, which again is very important. On the products, it is currently this 11,000-12,000 crores is predominantly mutual funds, though we have NPS and insurance corporate agency. But in terms of product, what we are trying to do is, how can you make an individual IFA as good as any large wealth management firm or a large bank, in terms of how much product does a good wealth management firm offer, right? And how can you bring those products with the right tech, right research to the IFA? So how can a normal IFA become as good as any great wealth management firm, any great bank? So it starts with having access to a lot of products. Yeah. Then you need tech, and then you need research, which ones to recommend. So I think so. How can we do that transition from being your neighborhood agent or distributor? How can that IFA become truly a wealth manager across asset classes, across products with the best tech and the best research? So that's what we're trying to build in FundsIndia.
Right. And you mentioned IFAs. Till about a few years ago, IFA was a very unorganized industry in India, and you've seen it. But there were a lot of these IFAs who were going door to door, selling these products in tier 2, 3 cities, even in tier 1 cities. But then the regulator said, look, this thing, there's some mis-selling happening over here. We need to come up with some regulations. They came up with this RIA regulations, right? Since then, some of them are then registered as an RIA and all of that stuff. So, how have you seen, why is it that there are so many IFAs today compared to 10 years ago, who are selling? Is there some reason why people are asking for this sort of an advice from an advisor?
I think so. So I joined the industry or NJ in 2003. In those days, if you look at the number of AMCs which are there in India, the AUM, the mutual fund industry AUM itself was 79,000 crores. So entire industry, all funds put together, 0.79. Today it has crossed 50 lakh crores. So in the last 20 years, it has gone up 50x, 52x, right? And that has happened for a reason, right? So Indians were used to fixed deposits, postal savings, physical real estate, gold, right? That's pretty much. The mutual fund industry started pretty way back in probably 60s, right, with UTI. But there was a lot of bad precedent, bad products, lack of regulation and mismanagement. So it really took off in a way in probably, let's say, 95, 96, when a couple of these private sector players came in. And then again, they had a shock in 2000 with the tech products. But I think so, if you see the journey from 2003 onwards, probably 2008, a little, here and there, COVID, the journey has been great. People have made 17, 18% returns, right? And so there is, Indians have learned equity investing, mutual funds, SIP is a household name today. And I think so IFAs had a phenomenal part in doing that, role in making that happen. Today, I think so almost 50% of all equity assets in India are through MFDs. And this has happened because there is a large pool of insurance agents who have made this transition from not just being a insurance agent, but even offering mutual funds and then probably NPS. So these traditional agents are trying to become the new age personal wealth managers, right, for individual investors. And I think so there is a lot of them have done a great job on doing this. of not just sticking to insurance products, and because the market did well, because the products did well, and from a regulatory point, I think so. The regulator has made the product extremely customer friendly. All those upfront charges, amortization, all of that is gone. It's a very simple, clean product now, right? And people do need help, I think so. Still, the industry is at about 4 crore investors right now in India out of the population that we have.
Yeah.
So still there are a lot of people who will need those people to start their journey with, and incidental advice about why they should invest, how much they should invest. So I think so. These MFDs, IFAs they play a very important role of educating customers, bringing them to these not assured return products like mutual funds.
Right.
And I think so. That's what has happened. I think so, and I think so. It's still early days. Like
Right.
I said, 4 crore investors only. A huge upside on that. And in MFDs also, I think so. There are pan India 80,000 people who are licensed for mutual funds. That number is not sufficient. Probably that's why you have only 4 crore investors.
Yeah.
Right. So if you bring in more MFDs and educate them more, certify them, they'll bring in another 4 crore, 10 crore investors. So yeah, I think so. That's what the short history of the.
Right. And you mentioned in Funds India, most of your business is in mutual funds, right? The industry in general, if you were to look at like the entire 4 crore investors, what do you think is the allocation that these investors have roughly in mutual products? And within mutual funds, what is it? Equities 70-80%, or is it also like debt? How much do they even think about this? Do they, if today you were to say, okay, this 4 crore guys, the entire AUM, if I were to see, how much of it do you think is in equity mutual funds?
So I think so. Retail is predominantly equity.
Okay.
Debt is more of HNIs, ultra HNIs, institutions. Like
Right.
Every company has treasury operations.
Yeah.
So debt is predominantly HNI, not institutions, not individuals. Retail is, I think so. My sense is should be 70-80% of that, maybe more, is equity.
Okay.
Right? But overall, out of the overall savings which somebody is doing, mutual funds can be 10-12% of that. I mean, there are numbers which RBI puts out, but my sense is it's still, some people are not investing a meaningful amount of their savings to mutual funds or equities.
Right.
Still, there is a lot of fixed deposits. So if you see the growth of fixed deposits in India, right? Even though every investment that you name, PMS, mutual funds, ULIPs, everything has, if you draw their graphs, everything is up. But it has not happened by cannibalizing fixed deposits. Even the fixed deposits
just
have
the
grown.
market has grown. The pie itself has grown.
I think so. The people's absolute savings have grown, right? Probably some sort of reallocation would have happened, right? But I think so. I don't see a cannibalization of something at the cost of this. I think so. Everything has grown simultaneously because this savings have grown. The number of savers in India has grown. I think so. The per capita has grown. So I think so. But I still feel that the allocation towards this asset class, equity, is not the ideal. It's not. It's lower than global standards, of course, but and that is again a function of time and experience. And I think so. It's going up. That's a good thing. But I think there's a lot of upside there.
So Indians are still investing a lot of their savings and capital in inefficient products like fixed deposits. That has not gone down.
Yeah, even in physical products.
Right.
They buy physical gold. They buy physical real estate.
Yeah.
Which, of course, when you have that, there are a lot of cost, no liquidity and things like that, right? So yeah, a lot of that is inefficient in a way. Yeah.
But I mean, real estate, we all love real estate.
Yeah.
I don't know what you did with your first paycheck, but I bought some property. So,
no, I think so. Indians, it's not just you and me. A large part of Indians
they do that, right?
is real estate. Yeah.
They buy a house, and then after that they think about, okay, now that I bought a house, let me think about investing in something. And then someone tells them, I bought a stock is up 30%. Why don't you go into? Then they go and buy. Then it goes down by 20%. Then there's a bit of scampering and so on. But we've had this golden period of 10, 15 years where the stock market has continuously gone up. You know, I mean, I come from a time when the Nifty was at 1800. You know? So I never thought that Nifty will be what it is today. You know, I mean, and I think neither did you. You know,
nobody
thought that it's going to go up so much, and consistently going up. Tax is better, everything is better. So people kind of say, okay, you know, let me put some money in mutual funds. But you know, like you mentioned, there is the IFA guy, who's a small, sometimes a one-man person. Sometimes maybe 3-4 people. Sometimes 7-8. He's got a slightly bigger AUM.
But generally.
And then the large wealth management firms who manage hundreds of thousands of crores, IIFL, Kotak Wealth, all of these guys, right? So, you know, for a retail investor, what is it that you think is the better option? To go to these wealth management guys who are better marketing, you know, they are slightly more sophisticated, more polished in their approach.
Correct.
Or the local guy who kind of has a more personal touch with the person, he's been with him for a long time. I'm guessing you work more with these sort of
So my
guys,
sense is the wealth goes after a certain set of people. It's not, you know, they want the retail. The wealth has these, you know, categories and minimum ticket size and average net worth and all. So they go after a certain segment. They've been fairly successful at getting, right?
Okay.
But let's say if you are a guy, an investor, and you have a sizable amount of money, and it's up to you as an investor whether you want to deal with a wealth management, branded wealth management firm or a IFA, right? I think so. Really, that is an individual's.
It's a personal choice.
It's a personal choice, but generally somebody would not have. The problem with IFAs is that they will have a lot of trust. They have a history. They have some connection, right? So you can bet on a fact that they can be far more ethical or more client-centric than a institution. That is right. But the downside is that the investor may think that there's, you know, in terms of research, in terms of knowledge, probably the wealth management firm scores better. So I think so. It's a trade-off between knowledge, research, looking more sophisticated versus being homely, more ethical, more connected. So I think so. It's really individual's choice what they put more value to.
Right.
But I think so. The lesson here for IFAs is to become more professional, more sophisticated. You know, come across as more learned, not just more ethical and more emotionally connected with the client. I think
true. That's
that is to become sophisticated, not be biased towards any particular kind of an asset class or a product. You know, really know what is totally happening in the market and not be, you know, just doing one thing. I think so. That's the lesson for.
Right. Manish, you spoke about alternative assets, you know, which obviously is what we do as well. In that, for sure, you know, the wealth management firms have done a much better job of providing access to that particular product, educating them, or at least showing that they know a lot more about this product than the local IFA. And whereas the local IFA has been held back by only understanding a small bouquet of products, which has been selling for a very long time. And if he were to grow his AUM or increase the number of investors he manages, he has to at some point of time understand this product as well. But what is it that's kind of holding him back here?
So there are a couple of answers around this, and you know, couple of, I mean, the reasons which I can think of is that so most of these IFAs start off as insurance agents, right? So there are about 45 lakh insurance agents in India, right? The mutual fund corresponding number for mutual funds is not more than 80,000 roughly, right? So they start off from a static product. So mutual fund insurance, most products are static. They are lookup tables, right? ये age है, ये term लेना है, right? What is the premium? If it's mediclaim, you know, you put on 3-4 parameters. What is the premium? And there's no events, right? You pay the premiums, you stay covered for that period. Right? That's the product. Now, when they transition from there to mutual funds, it becomes a different world. There are 45, 50 asset management companies, and there's 600 equity products. So for them, that is itself is a big learning, right? How do you go from a static, somebody selling, let's say, post office, 8% milega, 7%. From there, you suddenly go to this world where you have 40, 50 players and 600 schemes. And after having done that, right, they'll have to still build on that, right? So I think so, because the journey for most of them started, I think so, seriously it started post when we in NJ started, or when I started my career in 2003. I mean, a lot of IFAs started, coming into this world. So, and then there is this comfort zone. I think so, a lot of people did really well in the mutual fund industry. They are at 300 crores, 500 crores, they make 3 crores, which nobody frankly had thought of, that they can make this kind of money in just mutual funds, right? And a normal Indian who is used to making, let's say, 30,000-40,000 rupees a month, let's say 10 years back, 15, if suddenly that person starts making 2-3 crore rupees a year, I mean, then there is naturally this comfort zone that I've arrived, I've done good enough. So they don't really see the virtue in, doing more than this, than what they already accomplished. There is an accomplishment in itself.
Right.
That from 30,000 rupees, I'm at 3 crores annually today. It's a fab thing for them. Now to stretch even more, and it's a chicken and egg story, whether the clients start suddenly coming across these products which are new age in a way, like REITs and AIFs, and whether the IFA is willing to learn about them, understand the virtue and the differences with a traditional mutual fund, right? These are different, very different products, very different asset classes. So there has to be this willingness, but sometimes willingness comes from desperation,
right,
and not really from the need for it, technical. So my standard answer to that is that if you don't have an answer to how will you manage somebody's 100 crores, right? Let's say I give you 100 crores, please tell me what should I do. You can't just say आप इतना म्यूचुअल फंड में डाल दो, खत्म, 2 फंड में कर दो, SWP कर दो. That's not a very sophisticated answer according to me, right? You should add all asset classes. Within that, there are a lot of range. Within debt, there is a stack. So I think so, if you have the answer to that question, that how will you manage my 100 crores, then you will find customers are willing to give you that 100.
Right.
And you can't wait कि वो customer आएगा तब मैं answer दूँ.
Right.
You should be prepared, right, for that opportunity if it may arise.
Right.
So I think so, not, like I said, not being biased towards just products or in one asset class is a good thing to do, and being open-minded about, all the other products is very good thing to do. If you want to stay relevant, if you want to stay in business, you have to keep innovating, keep pushing yourself to learn the new things. And I think so, sometimes MFDs do get complacent, comfort zone, lazy. They're already doing very well in their in this new thing that they started 10-15 years back. So yeah, a couple of issues around that.
And then suddenly one day the stock market falls by 15-20% and everybody's scampering, and then they're like, okay, now I don't want to put, now you tell me, and you don't have an answer at that point of time on what they should be doing.
I think so, yeah. Uninterrupted equity boom also makes people lazy.
Yeah, lazy.
Around research and about all these other opportunities that may be coming their way.
Right.
So if there is some stress in that, they might suddenly become open-minded about that. Yeah, you never know.
We at PropShare, we started this product. We kind of, Hashim and I invented this product in 2015. It was not there before when we started. And over time, we built around it, we kind of engineered it, we found the structure around it, and then we gave access to the normal guy to go and buy this particular product in a securitized form, right? Yeah. And now the regulator is now saying this is a very good product and we need to introduce this as a new asset class, which is great. Very few times asset classes have been invented in the financial in financial history, so to speak. Collateralized debt obligations was the last one, which I know, which in 2007-8, which led to something anyway completely different. But now, if you were to educate IFAs about a product like this, or even real estate, how do you kind of go about it? Do you just
I think so. Again, there is this. I mean, these are questions which even an investor would have. If you are not a sophisticated investor, you would say either or.
Yeah.
To debt, equity, real estate. But I think so, it's not an either or question, first of all, for an investor. If you are, you will want to spread your money across at least 3-4 asset classes, right? Now, within that, let's say you have a solution for equity, a lot of products, mutual funds, PMS, AIF, right? Debt also you can do through mutual funds and AIFs, and you can buy bonds directly, all the grades, triple B, triple A. But there is no solution for real estate, which I think so thankfully to you, you have started that journey.
Right.
And I think so, if you understand the power of mutual funds and what they have done, so what is basically a equity mutual fund is don't buy stocks directly. You can't do the research, right?
Yeah.
You can't, at a certain size, if you have 1,000 rupees, you can't buy a 30 stock portfolio, right?
Yeah.
Which you can through a mutual fund.
Yeah.
So you get diversification. At low ticket size, you can buy a diversified portfolio. You get professional management.
Yeah.
You get liquidity.
Yeah.
So I think so, the product that you have created, it's similar to.
It's very similar.
It's
like,
similar, right?
If you have 5 crores, you can buy a floor in, let's say, maybe a small unit in BKC. But that 5 crore, if you invest through this
I'm saying that
unit, you can have like 30 of those together, or even a lakh or 5-10 lakhs in that in our case. You know,
yeah. So I'm saying even at a 1 crore ticket size in an AIF,
yeah,
right? You get diversification.
Yeah.
Now, if I want to take that 1 crore, what kind of negotiating power do I have with builders? Zero. What kind of negotiating power do I have with tenants? Zero.
Yeah.
And what kind of research will I do before I invest that 1 crore? Nothing.
Yeah.
Word of mouth, which is what pretty much people used to do in stock market. Stock value. So I think so, teaching people that this is a better thing to do with your 1 crore within the same asset class, which is real estate. I think so that's a noble thing, and that you've seen the fruits of that.
Yeah.
When you move people from trading in stocks directly or dabbling in the stock market to a more professional structure, which is mutual, you know the results of that. So this journey is, a similar journey on which you have to embark. So early days, like mutual fund early days, were challenging. I think so you will face those challenges, but the virtue of the product is same, and I think so because it brings a lot of things to the table. I think so nothing can stop from this thing to grow.
Right. I mean, yes, any new product that comes into the market, there is a fair degree of
headwinds.
Yeah. Regulator is also a bit concerned that he should be, he's conservative. He wants to make sure that someone doesn't misuse the regulations. So, which I think SEBI has been kind of doing. But when it does come, then REITs was like a perfect example. When REITs came, the first REIT was a Blackstone REIT, second REIT Blackstone REIT, fourth REIT Blackstone REIT. I worked and bought all these assets in Blackstone when we were, and then it became so big. We said there's no way to sell this to anyone. $1 billion. We have to sell it to the public. Yeah. And then we went to the regulator. We told them what REITs is and so on. Finally, they came up, and then now it has reached a stage where that also the ticket size started higher, and then they kept making it lower and lower. But a person is now willing to or understands, okay, if I buy the stock of Embassy REIT, I get 20 business parks in 5 different cities with 100 tenants like Google, Goldman Sachs, etc., which I would never have got. Fabulous. Right? So something like that is what is likely to happen in this MSM REIT thing.
Yeah, I think so. Moving people to a more efficient way of managing their savings, right? The question is always, what would you do and what would the professional manager do? And there is no argument about that. Mutual funds have already proved that, right? Mutual fund will do a far better job than what you'll do with research. So this is just extending that professional expertise which your firm brings to a 1 crore investor, right? Which is undebatable. I mean, there's no question about that. The problem is education, experience, right? It will take some time to get around that, to educate, spread the word around. But I think so nothing can stop that journey because,
Coming back to the IFAs, we also have a UK side of the business where we buy warehousing, and there we are talking to a few RIs. There the structure is completely different. So the way an investment advisor cannot charge any fee from the person who's selling the product, but only to the investor.
To the client.
So, which I found was quite interesting because then he is not selling that product. He's only taking it from the client. Right here in India, it is the opposite. You want to raise an AIF, you need to pay your pound of flesh, 3-4% to the distributor. Then he will go and sell your asset. Yeah. So when an IFA is selling a product today, what is it that is the single important driver for? Is it the commission alone that he looks at, or does he also look at the investors' portfolio, whether it's the right fit for him. Because my sense in dealing with IFAs is always that he's always a little worried about where is the largest commission for me and what I should sell.
Yeah. So I don't think IFAs or anybody is managing somebody's money, right, is only brokerage centric.
Okay.
Right. I think so. It is a parameter which people look at, but it's not the only parameter. Okay, and there is proof of that. That in with 44 mutual fund companies, there would be somebody who is more desperate, right?
Yeah.
And there will be somebody who will be paying half of that.
Yeah.
I don't think people sell twice the same category product, twice the commission. So people start selling that product now, right? They look for more consistent performance, outperformance, and so
right.
It's not commission driven. It is a parameter. It is not an NGO. They are not currently RIA. So this is a business at the end of the day, right? And but I don't think they just look at brokerage. I think so. This conviction, prior experience, if something is new, there is a lot of inertia, like you said, headwinds. I think so getting around that, making people experience this product, and I think so you already have one product which is like 2-3 years old.
Yeah.
And I think so spreading the word around that. Every product, new category has struggled for the first 5-6 years to reach that critical mass where it then suddenly explodes. Right?
Yeah.
So I think so. IFAs don't necessarily see brokerage, because I'm sure you'll be coming across people who are saying, no, we had a bad experience with a couple of real estate products which were launched previously. So if they were brokerage centric, they would say yes, but they are not. They are more looking at the track record, acceptance of clients. So I think so, yeah, brokerage is a parameter, but I don't think so.
It's also a long-term game, right? You can't just you have to have the client for a long period of time. If you don't give him the returns and he just
so I think
short-term fee, you are most likely going to lose that client over time.
Yeah, so I think most distribution, whether it's individuals, IFAs, I think so everybody thinks about the client first. I think so, irrespective of the regulation. I mean, who gets paid, how is not what decides your ethics. I think so. You can do a lot of mischief even if you are an RIA.
Yeah.
But I think so generally people do understand that if I create wealth for the customer and if I do the right thing, that's how I'll grow in my business.
The quality of the product is the most important.
Yeah.
That should be kind of good and something that fits the client's portfolio.
Absolutely. Teaching them clients more efficient way to invest their money, I think so, and the better products. And I think so they look at everything. It's not distribution. And regulations can't decide your ethics, I think so.
Right.
I mean, it's a more personal thing.
It's absolutely true. If someone wants to, misuse the regulations, that's
yeah,
always
I think so.
How much of a regulation you have?
So smart businesses will be client-centric, I think so. Whether they're individual-driven institutions, I think. So brokerage is not it is a parameter, I would say, but not the determining parameter. Yeah.
Right. And from FundsIndia's point of view, is alternate something that you're looking at educating your
Absolutely. So I think so we will build a full stack of products without being biased towards any single product or category or asset class. And I think so everything which is an and, we have to be an and product. We should not be averse to that. We should not be averse to something because it's new. Right? Because every industry needs early backers. People were willing to bet on the virtues, not on the track record, just on the virtue of that product, right? So I think so you should be open-minded to take the early read if you have conviction on that. And I think so everything which is an and, right? So in India, is gold and real estate and fixed deposit and mutual funds are not or. You look at any average Indian investor, these are all and products, right? They're not doing either mein gold lunga ke equity lunga, they're doing everything, right? So how do you offer them that entire product bouquet and get the most wallet share,
right?
And with the right tech and the right research, that's what we're trying to do. So yeah, we are very open to anything, all these things which are and within the similar products you can have research and try to curate a portfolio which makes the customers or the distributors' life easy. Like in mutual funds, there are too many funds, too many. So if there I come up that this is my selection for a client or a IFA, that makes their life easy. But then you know, after simplifying, you can't eliminate products also. That I will not sell real estate at all because this thing is going well. So I think so everything you have to have a full stack and products where the characteristics are different. the regulations are different. I think so. That is, we should have a full stack of products. Yeah. That's what we are trying to build.
Right. And finally, to finish off, a question that every investor asks a wealth manager: where do you think? What do you think is going to be the product that's going to be the one that we should all be in over the next 3, 4, 5 years?
I think so. Somehow Indians had from my father days, grandfather days. I think so. Diversification is inbuilt in our DNA.
And conservatism.
And conservative. So, thoda real estate, thoda gold, thoda FD, thoda insurance policy. That has been like there for donkey years, right? I think so. What anybody else what mutual funds have done, or what we are trying to do is, how do you financialize that, make it more efficient, right? From them managing directly. So I think so. Everything is going to grow. I think so. There is India itself is growing at a fabulous rate, and I think make 10, 15, 20 years. So I think so. Everything will grow. I think so. Every product which is more customer friendly, right, efficient, will grow. Toxic products, as we have seen in the past, they lose favor, and they stop being a product itself, right? But I think so. If you do justice to people, manage their money with the right amount of fees, right, and transparency and all those pillars, I think so. Everything is going to grow. So I'm not betting on. I don't want to be biased that this is my favorite horse. I think so. We look at a customer's portfolio, add the 4, 5, 6, 7 things which need to be there, right? All those 6, 7, 8 things will do really well.
Right. So what you're saying is that most asset classes in India are pretty good bets right now for an investor. You just need to figure out what your allocation to that.
I think so. That's a very personal thing. Somebody's. I think so. Financial planning and asset allocation are very personal things. But I think so. As businesses, right? I think so. Fixed deposit will keep growing. Debt funds will keep growing, PMS will keep growing, AIFs will keep growing, mutual funds will keep growing, insurance books are keep growing, Mediclaim, term, I think so. So all of that is going to grow, and I think so because they're growing because they all are actually AND products, and not either or. Mediclaim and SIP are not either or products, right? So I think so. If IFAs and expand their horizon and they understand there are another 10 or 5 AND products, I think so. The entire community will be bet on these 7, 8 things, not just one.
Great. Thank you so much, Manish. Thanks for spending time with us and educating us about the various products, the IFA market, how it's grown. You've seen it all over the last 20, 25 years. And all the best at FundsIndia.
Thank you so much.
And hope that we work together and
we will.
We grow each other's businesses, which of course is always we want to do.
Assure you that we will work with PROPSHARE. And I think you bring a lot of virtue to the table. I think so. You are way ahead of a lot of other businesses in terms of products that you have created, and we are with you with now and in the future as well.
Thank you so much, Manish. Thank you so much. I hope you enjoyed this episode of the podcast, and we were able to explain to you a little bit from Manish's point of view on how IFAs work, how wealth management works, and where the industry is headed over the next few years. We will see you in the next episode very shortly. Thank you so much.